We are live. Good morning, everyone. We are on Tuesday, September 23rd, and today might be a seek and destroy day. Yeah, there, I said it. All right, why do I think that? Well, what we got going on today as I opened up the charts was when we get, here's the Asia range is the pink box. The London range is the purple box. When we get London and Asia consolidating, that's good. But when London takes Asia low and Asia high, we then have like a 65+% chance of the day being seek and destroy. And seek and destroy is where it pretty much just continues to do this, where it'll push up one way, reverse, take out liquidity, take out liquidity, take out liquidity, and it's not really going anywhere. It's just kind of messing with traders until everyone's done. And it's taken out probably an hour plus worth of traders, and then it just rips one direction. So yeah, today should be interesting. We have 2 minutes until the open, and we do have news here at 9:15, which is flash manufacturing PMI, nothing major. All right, oh, I'm not showing everything here. Let's turn that on. Turn that on. So over here, I would like to see some kind of retracement down into discount. It doesn't need to be far. If we look at the hourly chart, for example, we had all this distribution from yesterday. And given how bullish the price currently is at these creating new all-time highs, I'm not expecting it to come down all the way down into here. But I would like to see it come down into like this 1 hour gap, for example. The only question I have about that is we have a 15-minute liquidity sweep into the gap. And so just making the guess, or keeping in mind the possibility that this could be the London low of the day, because it keeps doing that too. So I'm kind of waiting for more information. We have 1 minute until market opens. Let's see what we got here. So we have the regular trading hours gap down in here. Right there, there we go, 9:30 open. We can see it's a small opening range gap, so that's not really that relevant for us today. So I'm gonna turn that off. We don't need the opening range gap. Blue line is the midnight open. And then we have London high, previous day high. There is a bearish SMT up here at the top side, I believe. Now, when I was saying just a minute ago about it being seek and destroy today, that's one of the items on my market conditions checklist that I look at every day. Basically a cheat sheet. It's just a quick reference guide for everything that I look at to determine high or low probability conditions. I also have a cheat sheet for daily bias, session bias. I also have a cheat sheet for what is called a operating procedure, or a trading procedure. Basically just a checklist. And if you have these checklists, you can just run through them, and it removes the confusion and a lot of the overwhelm from trading, because trading is a lot of guesswork. You're sitting here evaluating and analyzing all this stuff, and you can eventually just experience, your brain short-circuiting, analysis paralysis, as it's often called. So what I find is having these quick reference guides, these like cheat sheets on hand, are super easy, because I can just run through them. I don't have to sit there and, my brain doesn't have to churn and sit there and thinking about, oh, what are my rules and what's my pre-market checklist or what's my bias. I just look at the sheets and start my day. I have these available for free inside my Discord. It's a free Discord. Just helping people. I'm just teaching because it helps me. It's part of how I learn. If that's something you're interested in, grab the cheat sheets for free. I just created a bunch of explanation videos and added it to the freebies. And there's a link below the video to the Discord, obviously. Okay, we have something I noticed something interesting over here. Look at YM. YM just blasted off. Wow. Look at that candle. 120 ticks already. So we have ES and NQ are just chilling, just consolidating. So here's the new day opening gap. Blue line is, on my charts, the solid blue horizontal line is always midnight open. The dotted blue line is always 9:30 time. And then this dashed gray line is always 12 a.m. And the pink box is always Asia session. So those are kind of like, I don't like completely bare charts because it's more work for my brain. I need reference points, kind of like landmarks. You know, this pink box is always Asia's range. So and then I see this midnight open. I know, I just instantly look at this chart and know what's going on. And back to making it easier on our brains, I like to make it as easy as possible. That's why I use a bunch of indicators. You'll notice on my charts, I do have a reasonable number of indicators, especially on my 1 minute chart for an ICT trader. They're all drawing things, so I don't have to. The less I have to draw, the better. Like this SMT indicator. I don't have to sit here and draw, I can just look, there's bearish SMT forming, great. I don't have to sit here and analyze it. I don't have to look at this chart and compare it. It's just on the screen. And now it's not everything. I still draw things, but if I remove 50+%, which probably I remove more like 70% of what I draw consistently, that just saves my brain. And so that's something I'm a big proponent of, is reducing the computing necessary in our minds so we can focus more on the things that are the indicators or, you know, can't do, such as maintaining integrity with your rules. Like that takes mental brain power to sit here and adhere to your rules. Like my rule is, for now, I am not trading this current macro. We're on the 5 minute chart, so we can't see it actually. Or I'll go over here. You know, as I'm sitting here, bringing you over to this chart, things are loading. You know, this time window, this macro is red because I'm not supposed to really trade it. And it takes brain power to do that. I have to sit here and remind myself, I'm not going to trade this macro. And then I have an exception, which is if it's a perfect model formed over an expanded period of time, then I can take it. So as opposed to drawing SMTs and midnight open and previous day high lines, my brain power goes to maintaining integrity with my rules and taking in the charts and the movements. And that's almost something that's like, it's just a gut feeling. Like you got to look at all these charts, analyze the different time frames, and really kind of take in a big picture of what's happening. Like put it all together. Like here's my 1 minute chart and my 15 and my 1 hour and my 4 hour. And we're conserving brain power for that. So anyways, that's a really long-winded way to say I like indicators that draw things. And I like turning my trading into a mechanical process that's as much of a checklist as possible, so my brain is free to think. And again, links below for any of those free checklists. They're all in the Discord, which is free. And then the SMT indicator, which I just spoke about, there's a link to that below. That is a paid indicator, one-time fee, well worth it. I don't like the subscription indicators. I think that's silly. All right, so price is starting to distribute, which is great. We were seeing a little bit of seek and destroy, a little bit of back and forth at 9:30, which is normal. But the other thing I was saying is I was concerned that price was going to do a little bit of seek and destroy for the AM session. If it comes down into this zone, one of these lower zones, I might actually have a trade somewhere down in here. So we want to keep an eye on it. We have 3 minutes left in this macro. I don't think the trade's going to be in this time window. Let's go back to the 15-minute chart. Man, look at YM. It is rocketing. So if we look at the 15-minute chart here, we can see yesterday's bullish breaker down here came up to 4.5 standard deviations and started consolidating. So for me, I'm curious to see when we hit 4.5 standard deviations, like look at all this liquidity down in here. That's kind of suggesting those are two clues, hitting the 4.5 standard deviations and leaving all this liquidity behind, clues that we might come down first before going up. So here we're tapping into this 15-minute fair value gap. I want to see it come further. ES is also pushing higher. So we have 1 minute-ish left in the macro here. I want to see price push down a little further. I'd like to see it come down, make a short-term swing, and then come down and do something like that. There is a little, like one tick gap right there, isn't there? And a volume imbalance. So we have this volume imbalance and we have a 1 tick gap right there. It looks like. So hard to tell, but I think so. At the very least, here's this volume imbalance, which when there's a volume imbalance and a fair value gap, we just lump them together. I'm looking at any of this kind of, I'm predicting the breaker. And at the moment, you know, like I was looking, if price came up this way, there's no inversion for me up in here. It's pretty ugly. This would be the breaker. But now that we have this swing forming here, this is going to start to be forming a breaker. So I want to predict where the breaker might be. I like what's happening here. We're pushing down lower into the 15-minute gap, the 1 hour gap. We've taken a whole bunch of liquidity. We've taken all the 4 hour liquidity. We'll go over here. So here the 4 hour candle sweeping all of this, which is nice, coming down into this gap, which is quite nice. Coming down into this gap. We had 41 after, so outside of the macro window. So this 15-minute pushing all the way through that gap. And when that happens, like I mark the top gap like this, we expand and include both gaps. This is what I was taught from one of my mentors. All right, so back here on the 1 minute. So now here's a gap, which this is more what I like to see, because now here's an inversion or a possibility for an inversion. It's also the first presented fair value gap. We have high probability targets, London high, previous day high. We have liquidity sweep. So just kind of pre-processing. If this were to happen, what would that look like? You know, can I get my 2-to-1 out of it? Yeah, I can. How much is the risk on one micro? 50 bucks. Okay, so I've got that. We have SMT forming. Let's see here. I need to adjust some of the settings on this indicator. I feel like session colors. I don't know why some of the labels are darker than others. More or less, I'm just assuming a bullish bias. That's what we want to do at all-time highs. We do not, according to ICT, want to try to pick the top and short it. At the moment, we have no other confirmed indications of bearish price delivery, unless this 1-hour candle closes bearishly, at which point would kind of probably be the start of anything, a change in state of delivery. We have a 4-hour candle that can close bearishly potentially. All right, so tapped into this gap. We have 1 minute until this 9:45 PMI, and we do have Fed Chair Powell speak at 12:35, but I won't be trading then. All right, news is incoming now. So here's this fair value gap right here. First presented fair value gap 2. Turn that off, don't need it. PMI is generally not a huge mover. All right, 9:46. I'm curious. I wonder if this setup's gonna confirm before the next macro at 50 after. So look at that candle right here, this 9:45 news candle. I can turn that indicator off, don't need it now. I mean, that was 49 ticks. $9:47 a.m. Still just waiting. Okay, we got some movement here. 2 minutes to macro. This candle's pushing up. Want to see a snappier response than this. You start stacking too many candles like this in front of an inversion. I want to see a nice V-shaped recovery. And this is starting to have a few more candles than I'd like. I'm okay with it at this point, but it is starting to look a little more like a consolidation. A little bit, so I'm keeping that in mind. It is starting to build a little bit of trendline liquidity down below. I'm keeping that in mind. Okay, 950. All right, coming down for this trendline liquidity right now. And I actually kind of like that. Clearing out some of this liquidity. I mean, it could come down and form an inversion or breaker right in here below. I'm okay with that too. I can long down here. I can long right here. Clearing out that liquidity, I kind of like that, because if it were to still go ahead and confirm here, at least I know half of the liquidity is cleared out. But let's zoom out and see what's the 5 minute looking like. I don't want this one. This indicator should not show above 5 minutes. This is the hourly open indicator. There we go. There's a 5 minute change in state of delivery right here. That's also a breaker, so I can call it a breaker. I'm assuming that's going to fail, because I'm assuming bullish price delivery. Well, that's super interesting. This volume imbalance appeared much larger. I've seen this before a couple of times too, when I changed time frames, come back, and the candlesticks have changed, because that's wild. I don't understand that. I've seen that a couple times. And I've recorded it at least one other time on stream where it came back and the candlesticks look different. Curious if I look at like another chart. Oh, interesting. So my 1 minute over here doesn't show it like this. So we can look on my other screen. Look at this. Here's this 1 minute right there. 3 minute, 1 minute. It shows two fair value gaps like I had previously had it. Look at YM. It is just skyrocketing. ES is pushing higher too. I don't know if you can see that. There we go. And NQ is doing the opposite. We have 5 minutes left on this hourly candle. We have a whole bunch of SMTs forming both sides. I wouldn't even mind seeing this 1 hour candle close and then the next 1 hour candle take that low and then push higher. And as far down as we're pushing, we go back to the 1 minute chart over here. See, this trade idea is not confirmed, so nothing to do here. Curious if 978. All right, so we went down into here. So at this point, there is no, that is not going to be a breaker. And well, it's not going to be the breaker I'd be looking for. So rebalanced all the way down to this high, this candlestick, through this buy side imbalance. And here's where I'd want to really see some responsiveness. Otherwise, here's the next level. Which it might, because look at the 4 hour. It hasn't come to the consequent encroachment of that. Busy right here, this midline. And so the next hour candle might do that. That would be nice. So here on the 15 minute, clean this up a little bit. So just scoping out this trade idea right here. Obviously this inversion, this could invert this as an inversion, but when the inversions are so close to the breakers, I feel like I'd rather take the breaker for just a little bit more confirmation than this inversion. In this case here, looks like it's going to push down further, which I'm okay with. We have 2 minutes until the next hourly open, 4-hour candle changeover at 10 a.m. And I'd like to see that hourly open get manipulated right here. Go over here. This 1 hour candlestick. Let that close, get manipulated, and push back up. Now we do have a 1 hour change in state of delivery. And we will have a 4-hour change in state of delivery. But for me, that's not enough to consider bearish price delivery. So yeah, see the consequent encroachment of this 4-hour candle? Oh, excuse me, this 4-hour gap. I want to see the next 1 hour hop into that. So now this changes a little bit where I might consider going in on the inversion here, because I'd be widening out my stop. Before, the stop would have been pretty tight for a breaker, and now if I go in on the inversion, I'm gonna have a little bit bigger of a stop. All right, so here's the 10 o'clock open. Okay, so inverted this volume imbalance. Let's just see here. Why am I not signed in? That's wild. I'm going to put you over on this screen so I can sign in. What happened? I logged out. Trade of 8. Okay. Okay, I don't know what happened there. So 2 would be 80 bucks for pair. Which is pretty dang low. But I'm not interested in risking a ton quite yet. I still haven't got too many trades in since I came back to trade after my month-long break, basically. What would 3 be? Okay, so over here, the 1 hour swept this low, tapped into consequent encroachment of that fair value gap on the 4 hour, looking good. We have bullish SMTs forming. That said, on the lower time frame, on the 1 minute, it's not willing to do it yet. Oh, it's, President Trump is speaking. Okay. Hmm. All right, it is 10:05. Closure above this, and I'll go in. All right, so formed this inversion here. Oops, not that one, this one right there. Which is not what I want to see if I'm looking to get into a trade right here. That's A, telling me price delivery could be bearish, and or B, telling me it might want to just consolidate down here. So we'll see. We'll see. I'm curious. I'm going to pull up President Trump speaking. That might actually be why it's consolidating.
For being here. Madam President, Mr. Secretary General, First Lady of the United States, distinguished delegates, ambassadors, and world leaders. 6 years have passed since I last stood in this grand hall and addressed a world that was prosperous and at peace in my first term. Since that day, the guns of war have shattered the peace I forged on 2 continents.
Ooh, this is a tough call. He is talking, and could send this going either direction depending on what he says. And it is currently 10, 10, 10, 11. It is closing outside of this. It is not confirmed yet. I'm outside of my macro. So here's this trendline liquidity. Feeling a little bit more like I want the breaker now. Feel like I can be a little more patient.
Down. Gasoline prices are down. Grocery prices are down. Mortgage rates are down. And inflation has been defeated. The only thing that's up is the stock market, which just hit a record high. In fact, hit a record high 48 times in the last short period of time. Growth is surging, manufacturing is booming. The stock market, as I said, is doing better than it's ever done. And all of you in this room benefit by that. Almost everybody. And importantly, workers' wages are rising at the fastest pace in more than 60 years. And that's what it's all about, isn't it? In 4 years of President Biden, we had less than $1 trillion of new investment into the United States. In just 8 months since I took office, we have secured commitments and money already paid for $17 trillion. 4 years less than.
Okay, so I don't know how long he's going to be talking for. So I'll take a coffee break. Maybe. So I like where this 15-minute is closing. It's above this volume imbalance. That's nice. Now see how this inversion is just being chopped up left and right. So it's a BISI. 1, 2, 3, 4. So here we're exactly where I want to see my model. I see my model, but we're getting this time distortion here while Trump is speaking. So here's in the 15-second is a 15-second stop hunt and breaker right there. And that's a beautiful time-based breaker. Oops. Trendline liquidity.
We both stood.
Oops.
Teleprompter. These are the two things that is a bad teleprompter. It's working now. Just work off. You should just do it the way it's easy. Realize that the during the day. Such seem to do is right and then never negotiated Abraham Accords with big things our country received. Yet the real prize will be to live, grow up, the mother, as many people are being killed. Glorious.
So we are at 10:20. Next macro. Never took my coffee break, did I? Kind of wanted to see what was going to happen in here. Put my jazz back on. When I'm trading, I like to listen to like jazz or like stoic, chill step, deep focus, productive focus kind of music. Anything that's low key. Still nothing to do here. All right, it's pushing further down, inverting that inversion yet again. All right, so the 5 minutes just consolidating. So I am going to take a quick 5-minute coffee break. Make sure I got my phone on so I can see the charts. There we go. Oh boy, didn't even get it made. And I saw this candle pushing and I wanted to take a look. 2 tailless candles. Potentially one might confirm in 15 seconds. Still within the macro. Is Trump still speaking? He is. Which means you don't want to be in any significant position. Because the market can just whip. So I'm anticipating this to become an inversion. I'll go ahead and recolor it so it's clearer. I didn't get my coffee made. I was gonna make chai, actually, a chai tea latte. Okay, this tailless candle is now mitigated. Five minutes not looking so great. So this is bridging on conflicting with one of my rules, which is if the 5 or the 15 is accumulating, no trade. Which is, I'm looking at this here, we have an obvious accumulation range. Just kind of taking it in. You know, this accumulation range is not what I want to see. In addition to Trump delivering remarks during a trade, I don't want to see that. So I'm not seeing anything in the Twitter sphere, people doing much. I think a lot of people are sitting on their hands. A couple people are stuck in trades. Someone shorted here, I saw. Someone took a long in here and is just getting chopped up. Looks like Trump is still speaking. Guess I could have finished my chai. So the 1 hour still looks all right, you know? This gap has been mitigated. This low has been swept. There's SMT down here, I believe. Yep. But we drop lower than that, like to the 15, and it's not looking as great. Here's this sell side imbalance that we haven't yet priced into. At the very least, I would have hoped to have seen a push up into, but I'm not getting any entries in this consolidation down in here. The 5-minute was consolidating. Now the 15 minutes starting to look like zebra stripes, right? This candle looks okay, but this candle right here starting to show signs of consolidation on the 15. Of course, there's consolidation on the 5-minute, there's consolidation on the 1-minute. And my guess is it's going to give me a weird opportunity where I'm going to be sketched, like not wanting to take it. It's going to leave a bunch of trend line liquidity in a tailless candle like this one, and then it's going to close above this breaker. And those are the situations I don't like. Trump's still speaking. Time-wise, still inside the macro for another 2 minutes. Patience pays. So what was it? I was making my chai over here, right? Two-minute, 3-minute. 5-minute. And there it is. Is it going to do it right now? 1 minute outside of the macro. Look at that. No entry. Possible I could set a limit order. It's outside of my macro by 2 minutes. Trump is still speaking. Okay, I'll go in outside of my macro. By a couple minutes, 2.5R. Like so. Actually, don't even know how much risk that was. 91 for 2. So that's a partial risk trade. Tapped into the... So here's a 5-minute breaker right here. You know, I'm not gonna lie, I think I felt some FOMO on that trade. I think I waited for so long. That it made me feel FOMO. So now here in this case, I'm gonna say, I feel like I should. So here's this is already getting inverted potentially. That could be the stop hunt for lower prices. And I think I'm wondering if I'm seeing this completely opposite. This should have been a short because here is the stop hunt. Right there. But that wasn't high probability liquidity. You know, I think I did what I said I was gonna do. It's what I wanted it to do. I think I should have avoided it because it was ugly. And I should have got in with lower risk so I could have had a nice wide stop seeing this price action here in this tail, this candle. So I think that was probably where I could have improved this. So let's make notes here. Wider stop given PA. I'm also going to say 5 minutes consolidating. So I kind of broke a rule. That's okay. Because even this is super low risk and won't hurt my account. But that's also part of it. All right, I'm out. So this had a 4-hour stop hunt. We had a SMT. We had a high probability target. We were at a 4-hour fair value gap. Oh, it's going for that tailless candle, huh? Right there. Let's see what it does. See if it responds from there. Let's see here. Breaker IFVG. I only did 2 mics, which was about a, was it a $100 risk? Super small. And so here's my model in reverse for continuation. Looks like Trump is still speaking. All right, so I'm gonna leave it at 1 shot today. I'm not gonna take any more attempts. I feel content that at least I had one idea. I waited for it, and you know, you want to be able to adapt to changes that you see. Other than the consolidation maybe telling me to stay out of this, I wasn't seeing this as needing to flip bearish until actually after this response, at which point it said, okay, maybe there is time for a little more bearish delivery. But I do notice, I think the one big thing is I got impatient. So I'm going to make note of that. I got, so just after waiting all AM, got impatient, felt some FOMO when confirmed. Not a huge deal. Not a huge deal. The only thing that'll bug me is if it came down for this tailless candle and then runs to my target. That might bother me, but I'm okay if I'm offsides. Did that 5-minute breaker confirm? It did not. I guess I forgot to check for that. So that was another mistake on my end. So made a couple mistakes here. It's okay. This is how you learn. Thought the 5-minute breaker confirmed, and it did not. So there we go. Eight minutes left in this 1 hour candle. All right. That was my shot. I'm going to walk away from the charts. This is one of my superpowers. Woo! Just trying to take a look around. Yeah, this 5-minute, look at that. Super ugly. All right, I've had enough fun for one day. I will be live tomorrow, same time at 9